Are you a wealth architect? That's somebody who wants to grow in all areas of life, not only financially, but mentally, physically, and spiritually. This is exactly what we're doing every single week on this show. I'm Emilio Despirito, your host of the Wealth Architect podcast, each and every week here. Wherever you're tuning in, we're glad you're here. We hope that this episode inspires you, motivates you to do something big, and maybe even blows your mind. Make sure you comment and interact with us. We love to hear from you. Let's get started. What's up, Wealth Architects? I'm Emilio Despirito, and this is the Wealth Architect podcast. Every week, we start it with the Market Pulse. And here's the deal. Listen, we love interviewing all types of different business owners, but we love talking about real estate. It's what I do in my day job every single day. I help people buy and sell homes. So let's talk about that. Right now is the spring market, and everybody, it seems like, is getting ready to put their home on the market. And I was recently in a listing appointment. That's where we go get a home to sell for a seller. And they said, you know what, Emilio? We met with ABC Realty, and they said that they can get us a much higher price. Now, here's the deal. I want you to think about this. Every realtor has access to all of the same information through MLS, multi-listing service, where we can see all of the comparable home sales, and we can really get a great idea, almost exact, on how a home will sell and for what price point. Now, experience varies with different agents, of course, and no one ever wants to lose money. But at the end of the day, why do you think some agents are so far high in price versus the other ones that aren't? Maybe they want to win your listing. Don't just go with somebody that offers the highest price. Make sure that there's data and strategy behind that to make sure you get the best bottom line. You can't trust everyone in business, so make sure you go with your gut and follow the data. It's always going to lead you home. So we've got a fantastic show today. That was my Market Pulse tip for you today. Stay tuned. We're going to have a great time. Hey, a special thank you to our sponsor, Annie Mac Home Mortgage, whose Cash to Keys product is disrupting the industry. Sick and tired of finding the perfect home, not having your offer selected? I got to tell you, it happens all the time. With Cash to Keys, Annie Mac gives sellers a cash guarantee for each of their buyers' offers. Stop bidding and hoping. Instead, bid with Annie Mac and bid with confidence. Don't just bid, but win. Annie Mac Mortgage. When you're considering buying a home or a condo or even an investment property, it's so important to hire the right home inspector. Specifically, if you're in Rhode Island, the home inspector that I always like to recommend is Mike Auger of Patriot Home Inspections, homeinspectorri.com. Why do I use Mike? Number one, he's not an alarmist. He's not going to scare you. He's going to walk you through everything you need to know about the house. You can follow him around like a puppy dog. Ask as many questions as you can. He'll tell you how the heating system works, how the electrical works, how the plumbing is, and he could save you thousands of dollars or even a future headache. If you are looking to sell a home, it's important to disclose as much information as you can ahead of time, and Mike Ogren can put together a pre-list home inspection report, so when your realtor represents you and gives the buyer's agent the report, everything is disclosed that needs to get fixed, and the price is the price, and you sell your home like that. There's so many benefits to using the right home inspector, and again, Mike Auger with Patriot Home Inspectors, homeinspectorri.com. Check them out. Hey, thanks for tuning in. This is the Wealth Architect podcast. You know, we're excited each and every week to bring some amazing guests here for you. And today we've got a treat because we're talking the Syndication Playbook, raising millions, structuring deals, and winning in multifamily. We've brought on an expert in this field. And so today's guest is operating at a level that most investors dream they could. His name is August Biniaz, and he's the co-founder and chief investment officer of CPI Capital, a firm that has raised and deployed tens of millions of dollars into large-scale multifamily and build-to-rent communities across North America. He has built his business by mastering what most investors struggle with, and that's raising capital and scaling. Structuring sophisticated syndications, and executing institutional quality real estate deals while bringing high net worth investors along for the ride. From launching in a real estate private equity firm from the ground up to navigating market cycles with precision to understanding exactly where we are in today's multifamily clock. This is a conversation about how deals actually get done at the highest level. If you've ever wanted to break into syndications, raise serious capital, or think like a true operator, not just an investor, this is the one you don't want to miss. August, welcome to the Wealth Architect.
Thanks for having me.
Hey, you're welcome. You know what's funny is our listeners, they can't see what goes on behind the scenes. And like right before we had you on, we had all sorts of chaos happen, right? Our recording software wasn't working, this and that. But isn't that business and isn't that life?
It's actually, interestingly enough, in the space I'm in the real estate private equity space, same kind of things happens because as general partners, we go out there to source deals and analyze them and package them up and bring them for our investors. So by the time that deal comes across our investor's desk, so much work and so much sweat equity has gone into preparation. Same thing we did for the show today, as you mentioned.
Hey man, you got to roll with the punches. And I feel like it's like that old Rocky saying, it's not how hard life hits you, it's how many times you get up. And I love that. We're constantly getting up. So, August, before we jump into all of this, right? You're a total gentleman. I've been following you on social media. You're doing great things. Can you tell us a little bit about yourself? What just a little bit about yourself, what inspired you to get into this type of business and anything else you want to share?
Yeah, absolutely. I come from somewhat of a real estate family. My dad wasn't, who was a breadwinner of our family, wasn't really in real estate, but my mom was. My mom dabbled in real estate. Her father was a real estate investor and a broker. So my maternal grandfather was a real estate investor and broker. So I understood real estate from early on. If real estate was a language, I understood the language of real estate and the investments my mom had made. So I got into real estate from an early age. In my early 20s, I had started being a broker. Wasn't the best at being a broker. I felt it wasn't a really scalable industry, but today that I was proven wrong with people buying brokerages and growing them to Goliaths in the business. So I got into doing small fix and flips, buying homes myself as a broker. I would find great deals. So started doing that for a while. Eventually started my own home building company, White Rhino Developments, no longer in business, been a few years now. So I did that for close to a decade. So I would build homes for clients. So those are custom homes, as is known in the business. And I would also build homes as an investor to build and sell. So those are called spec homes. So I would build both custom and spec homes in the business for 10 years. Always wanted to scale, always wanted to do bigger project. But as I was looking at around my space in the city I was in, Vancouver, west coast of Canada, it seemed that groups that were eventually able to build large projects like high rises or projects worth hundreds of millions of dollars or even billions of dollars, they were in most cases multi-generational. It took a few generations for that money to build up, for that equity to build up before they were able to do these larger projects. I wanted to expedite that process, and that's when I was introduced and learned more about the world of private equity, real estate private equity, syndications, funds. And that kind of put me into the journey, and I was able to be lucky enough to find a couple of great partners and co-found CPI now close to 6 years ago.
That's amazing. It's so funny how, businesses always start out of a need. Either a need to want to grow and try something else or a need out there that needs to be fulfilled. And I love that you're like, hey, I don't want to wait. I want to scale and I want to do it now. And you did just that, right? So can you give our listeners a high level overview of what a syndication is? And then we're going to dig down and learn so much more about what you do.
Yeah, just quickly on that topic, syndication is basically when a group comes together to execute a project. It doesn't necessarily have to be real estate, but let's put our focus on real estate. So if there is a real estate project that needs to be completed, if it's a ground up development project or an acquisition project, a syndication is when a group comes together to execute that deal. Now, majority of those group members are passive, our investors are funding the capital needed for the project, and there's a few that are the general partners, the skippers of the boat, if you may. The process to raise capital and executed deals in the real estate space is more broader than syndications. Syndications are usually project specific, so they're very specific on one deal. So a sponsor, operator, general partner, those are all synonyms. An August Biniaz or a CPI Capital, sources a deal. It's a great deal. They have at some point run out of their own equity, or the deal is too big that they can't fund it themselves. So they go out to members of the public or their own group of investors that they have connections with, and they raise capital for that one deal. That is usually called a syndication. But
Mm.
this ability or this process to raise funds for deals could be as simple as a joint venture. Yourself and a partner can go out and, you go to your partner, hey, I understand the short-term rental business really well, and I can see a couple of great deals in my periphery, and you come and put up the capital, I'll put up the sweat equity, and we'll do this deal together. That's called a joint venture. So you create a LLC or a limited partnership or a corporation, and you put that deal together. If it's a bit larger and you want to bring on possibly members of the public, you do a syndication. So it's a group of investors, the general partner being one person or multiple people. But it could get larger than that as well. It could turn into a fund. A lot of times you hear about real estate funds. So a real estate fund is usually a similar vehicle, an LLC or a limited partnership. But a real estate fund has a longer lifespan. It's not just one deal. It's comprised of usually more deals. It's a basket of deals. So it has a mandate. If it's a closed-end fund, it's usually around 10 years. If it's an open-ended fund, it runs for a long time, it's evergreen. But multiple investors can come in, and investors can have redemption rights. They can leave the fund at some point, and more other investors can come in, and assets can be acquired, and assets can be divested. So that's the fund model. And then eventually the largest one of them all is REITs, or public REITs,
Yep.
real estate investment trusts, that were created by the godfather of real estate, is Sam Zell. That allows people to have exposure to the asset classes they believe in through this vehicle that's called a REIT. The public REITs have even instant liquidity, so you can buy and sell your shares. That's a
Sure.
high level kind of understanding of different vehicles and processes that exist.
Well, that was a really great high level understanding. I think it's great to kind of set the tone, set the foundation, let our folks know, what exactly we're talking about, because there's people that are in real estate or that have money they want to invest, and they might not have ever heard of this. So I think this is fantastic. Now, August, when someone says they want to start a real estate private equity firm today, okay, what are they underestimating the most?
Yeah, I mean, that's a great question. I mean, I'd
Thank you.
say somewhat of a struggle that I personally went through. I was a home builder, as I mentioned earlier, for 10 years, had
Yeah.
built many homes for clients, had worked with many brokers and other service providers. So I'd cemented my name in that space when I co-founded CPI. And now, we were acquiring larger apartment communities in the US. Most of those people that I'd connected with were from Canada. So I thought the process of raising capital and going to these people that have known and liked and trusted me for many years was going to be an easy process, but it wasn't, because the vehicle was alien. This idea of passive investing or being a limited partner was alien to them. The idea of investing in the US for being a Canadian investor, that was something new, or investing in apartments or receiving these units, as they're known in limited partnerships, or in the world of corporations, they're called shares.
Hmm.
It was very new to them. So it wasn't an easy ask for them to say, hey, let's buy a house in Vancouver and I'll build it. It was something like, I'm buying an apartment community. I'm buying this $20 million apartment community, and your share of it is just the amount you put in, 100,000 or 200,000. So the conversion rate wasn't as easy as I thought. And soon
Hmm.
after, we realized at CPI, we have to actually build our investor relations infrastructure to be able to go out there and raise money. And even if we were able to raise money from our circle of friends or circle of influence or business associates, at some point we were going to tap out. We were going to squeeze the juice out of that database. So we had to bring in new investors into the funnel. We had to bring in new investors and nurture those leads to eventually then bring them these deals and say, hey, we have a deal. Would you like to invest with us? So there had to be a
Hmm.
process where these investors connected with our investor relations team and learned about our business process, learn more about current deals we're working on or past deals. So we had to go and actually build the infrastructure to achieve that. And marketing is a huge part of that, right? Marketing is where you create those leads that come into the funnel, and then your investor relations team takes those leads, qualifies them, has calls with them about to see if it's a right fit for them. There's a compliance element in there as well, and then you're dealing
Hmm.
with both Canadian and U.S. investors. So it could easily get complicated. But the simple part of it is, if you're planning to do larger real estate deals and continuously raise capital, the infrastructure for dealing with those investors, with communicating with those investors, with nurturing those investors has to be built to make the process a lot easier.
That's right. And so, I mean, underneath all of it, you can have the best marketing, you can have the best infrastructure, but really none of that goes it doesn't go anywhere without trust, without a reputation, right? So if somebody is just starting out and they don't have a reputation for, putting anything together yet, what is a tip that you can tell them or a tip that you can share with them?
Yeah, I mean, if they have a track record in a certain industry or an asset class or a business model that they've executed in the past, if they're in the short-term rental business and they own 10 short-term rental properties, or they're in the multifamily business, they own a couple of buildings and they've done an excellent job in renovating those communities and those increasing the income those properties produce, and in turn, force appreciating those properties. It doesn't matter what business model they've utilized or what asset class they're focused on. If there is a level of track record, that could immensely help them. Now it's just a matter of bringing leads and explaining their success in that space. The difficulty is when there is no track record, and
Hmm.
they have to also bring in these new leads that haven't really done business with them. So that makes things much more difficult.
Sure.
With us at CPI, that's something that we faced early on, because even though we believed in U.S. multifamily at the time, U.S. multifamily, the asset class, had done tremendously well in the 20 years preceding to 2019. Multifamily had actually beaten the S&P 500. So it was a great asset class. So we really believed in the asset class. U.S. was becoming, and it still is becoming, more and more of a renter's nation. So multifamily serves that need. Over 10% of Americans live in apartment communities. 1/3 of Americans rent, but approximately 10%, over 10% live in rental communities. So it was an asset class. It was a need that existed for us. So,
Hmm.
but it still was difficult to say, hey, we haven't done a deal before. So on our first few deals, we actually partnered with a different group that had a track record. We came in as an equity partner. We were the general partner on the deal. So we used their track record and their experience to showcase to our investors, we're not going at this alone. But after doing a few deals, we started basically doing our own team, and then we started building the acquisition infrastructure in-house. So that was another division that had to be built. The asset management division had to be built. So really a work in progress. But at some point, you're able to do deals yourself, sign on a loan, and other important factors that go into doing these larger deals.
Some fantastic advice. Basically get a mentor, work under somebody, have a piece of it. You don't have to go for the whole thing. Gain that experience, and then you can add that to your resume. And resume and experience is so important, and I feel today, especially there's a lot of scams out there, right? And there's a lot of people from all over the world that are constantly coming at you with all of these deals, right? How does a consumer know, hey, you know what? I trust this company. Is there like is there anywhere where they can check to see if this fund is legit, or if this syndication is legit, or do they just have to go off of reputation? How does that work?
Yeah, there's a few check marks that they have to check off when they want to, invest in these types of private placement types of products. So number one is, what is the business model? What is the asset class? What is the industry they believe in, right? If they're a believer of development deals, they shouldn't be investing in a multifamily value add. Or if they believe in industrial, they shouldn't be investing in hospitality. So they should kind of have a feel of what is the asset class they believe in, and if they've learned
Hmm.
something about it, or if they read some literature. So first, decide what is the business model that you want to execute and utilize as a passive investor to invest in. And then the next step is finding different firms that offer these types of investments. And really, a great way to go about it is, a lot of firms have a lot of information online to find the deal, to see if it's the right firm to partner with, because a lot of they have marketing material available online. So there's a lot of ways to find these different firms. Through referrals as well is a great way to source these different groups to partner with. But one of the earlier questions that needs to be asked really is about track record. How many deals have they done? Have they ever lost investor capital? The other very important point is when you're differentiating between scams. Now, there are situations where something unscrupulous takes place, or there is lack of experience or knowledge or what have you. And that happens in business a lot of times. Well, when you're completely trying to separate between scam and non-scams in most cases, are there legal documentations? Is this going through the Securities and Exchange Commission for the investor to be able to invest? So is there accreditation? For example, we use an exemption in the private placement world called the 506C exemption under Reg D, which have to report to the regulators about investors that we raise from, and our investors have to be accredited. So there's a third-party accreditation company that has to get them accredited. So those mechanisms and those steps should initially give them at least some level of understanding that this is not just an IOU, or this is not just some shoddy business deal. There is a level where this group has gone to a securities lawyer, drafted a private placement memorandum. There are subscription agreements. It's very legit. And then they go through the steps to make sure that they have the track record and the communications they have that with their investors, how often they send updates. And most common, aside from these scams that exist out there, the common complaint about investors is getting updates. A lot of times investors don't get enough updates. They get an update once a year, if that. With CPI, knowing that we are a smaller boutique firm, we wanted to kind of work on where we can to make the investor journey very comfortable. So one of those items is investor communication. So we send monthly investor updates to our investors, aside from them being able to log into our investor portal and see how the deal is doing and where the deal is at. We also send monthly updates that our team puts together and sends them. So you get a comfort knowing that what's been happening with the deal, where the occupancy is at, if it's a development deal, what stage is that? Are we on budget? Are we on time? So these all give investors a peace of mind, and then they will end up referring you and bringing you other investors and other partners.
Communication is vital, right? Especially when people have hundreds of thousands or millions of dollars out there. And I can't believe over the years and how many companies or services have failed just because of that one piece. They could have been extremely skilled at what they do, extremely accurate, very good, high earners. But if people aren't hearing, sometimes they lose trust and they lose interest or faith, and they're going to go somewhere else. So that's absolutely huge.
Let me add one thing to that. I think it's very important because, like I said, I was talking about earlier, where we do a lot of marketing to bring in leads, and not a lot of, most times those leads don't invest right away. They stay in our database, they stay in our CRM, and what we do is we send out a weekly email educating them, updating them on what's happening in the market, in the economy. So that nurture process is also very important, because just because you connected with an investor either through conventional marketing strategies or even in person, and you added it, there's got to be a mechanism where you add them to a CRM and you update them in some way. Because if you just met somebody at a function, or you met somebody at a networking event and they seemed very interested, you call them 6 months later when you have a deal, they might not even remember who you are. So
correct.
That part is also very important. Exactly. Yeah. So it's not only communicating with your investors and updating them, which is tremendously important, is also when investors are there looking around and thinking about investing with you or becoming your partners, that communication process is also very important.
It's a loud world out there. And, that's why we love our listeners, and they tune in here to the Wealth Architect podcast. I'm Emilio Despirito, and we're on today with August Biniaz. He's the co-founder and chief investment officer at CPI Capital. And we're talking about the Syndication Playbook, raising millions, structuring deals, and winning in multifamily. And if you're just tuning in for the first time, you can catch the show on SoundCloud, Spotify, iHeartRadio, Apple Podcasts, subscribe on YouTube. Pretty much anywhere where you can find content online, we are there. Make sure you give us a follow, and go ahead and rewind this segment, because there's a lot of content that we uncovered here, which I think is going to be very beneficial to you. So you've raised millions and millions of dollars. What separates the people who think they can raise capital from the ones who actually do it constantly?
It's that infrastructure, it's having the right team members, it's having the right systems and processes to be able to continuously raise capital. There's lots of unknowns in this space as well. When we first started out, we had close to 1,000 people in our CRM that we had added in from people we had done businesses with in the past, myself and my executive team. So we felt pretty comfortable that on our first deal, we could probably raise tens of millions of dollars, but that wasn't the case. We had a wake-up call that just by having accredited investors as part of your list, that doesn't equate to actual investing type investors.
Hmm.
Currently, we have over 10,000 people as part of our database. Thousands of them are accredited. But the process of qualifying those investors, and what I mean by qualifying is an investor lead comes in either through a personal face-to-face meeting that somebody gets added to the CRM, either through conventional marketing strategies such as social media or
Hmm.
LinkedIn, if it's through paid ads, some form or other, somebody gets added to that database. Now, let's say through that process of onboarding, they check off a check mark where they are accredited. So the system assumes that they are accredited. But that doesn't mean that that person is accredited and they're going to invest with you. There still needs to be a qualifying phone call that they have with an investor relations team member where they get on a call with them. They find out if they are accredited. They find out if they even know what accreditation means. They find out if they have liquidity, if they understand the business model. Have they ever invested as a limited partner in the past? And they input all of those answers into the CRM, and they're now noted as a qualified investor because they're not just then they haven't just filled out some form or met August or his team at some conference. They've actually been on a phone call with us and agreed that if we do have a deal that matches these criteria and these points that we provided them, that they will invest with us.
August, can you walk us through what some of those questions are on the form where they fill out to see if they're accredited to invest in one of your funds?
Yeah, so those forms shouldn't, in my advice and our team's advice is those forms shouldn't be extensive because that's just a quick onboarding point for them to either subscribe to your newsletter, to
Mm.
subscribe to your investor form, or to get some kind of a lead magnet that we're offering. For example, currently on our website, we're offering a back of an envelope underwriting model that our VP of Investments, Paul Hopkins, put together. So by providing some of their information to us, they can get that underwriting model. That's usually first name, last name, phone number,
Mm.
email, and if they're accredited or not. I think that's more than enough in some cases. And these fields are forced. You have to fill them before you go to the
Mm.
next stage. So, but if you make it more than that, a lot of times people just get dismotivated and they might just walk away. So you should make that brief. But when it comes to an actual qualifying phone call that they have with an
Yep.
investor relations team member, and that's usually an appointment setter type. You don't want to have your closers or your best investor relations team members being on those qualifying calls because those team members usually cost a pretty high salary, so you don't want them to be there
Mm.
on those initial calls. So it's more of an appointment setter to get on a call with them and ask them basically certain series of questions. First of all, where are they calling from? Are they from Canada, from the US? What state, what province? Have they
Hmm.
ever invested as a limited partner before? Because somebody who's invested as a limited partner before, they've gone through this process. They understand what it
Hmm.
is. They have the dispensable income to be able to invest in these types of products. Are they accredited or not? Do they know what the accreditation means? Do they understand our business model? Give them a brief understanding of what is it that we do. And do they have liquidity? Do they have the money? Our average check size, our average investment size is usually around $130,000 USD.
Hmm.
So our minimum investment is usually 50,000. Do they have 50,000 to invest? So those are some of the high level questions, and you don't want to overwhelm them with questions either. You don't want to be too intrusive, but it has to be a qualifying call before they're booked on a call with investor relations team member. And again, there's a lot of ask, as you can see here. It's a high income earner, an accredited investor type. That means somebody who makes individually over $200,000 a year, or with their
Hmm.
spouse make $300,000 a year. So this is somebody who's already focused on their craft. For them to get on a call with you and give all this information, they really have to either believe in your investment that you have, or they have to be referred in, because this is so much that goes in on a cold call, or if it's kind of an outbound call. So this most
Yeah.
probably has to be an inbound situation where they found you or your firm very interesting, and now they want to put that time to go through that list of questionnaires. So you can see they have to fill out an initial form. They have to get on a call with an appointment setter type that asks them high-level questions to qualify them. Then they're booked on a call with an actual investor relations team member where they provide them more details and create a really connection with them. We take detailed notes on our CRM. So somebody says, hey, it's my daughter's birthday this week. So we're going to put that in the CRM. So if they speak to them again, they bring up their daughter and talks to them about, hey, it was the birthday last time we spoke, or they have a new venture, they bought a new piece of real estate. They put that into the notes so the investor relations team knows how to bring that up and have that connection with the potential investor. Because at the end of the day, this is not somebody who just invests and now there's no relationship there. You're basically getting married to this person for 5 years, and
Sure.
getting referrals is the best way to grow your investor database. But also,
Amen.
as a marriage, this could be difficult as well. So somebody who asks, is very intrusive on the reciprocal side, where they're coming in and asking a lot of questions, that takes a lot of time and toll on our team as well. So, or somebody, just like any other service provider, it's got to be a reciprocal where you're providing a service and you're getting, a respect back. So you want to kind of pick who you're going into business with as an issuer, as a general partner, as a sponsor. You also want to pick and choose who you're going into business with as well.
That's absolutely everything. If somebody is not in with our ethos, right, or if they're not taking our advice on something, or they don't do business in which the way we do or up to our standards, we're telling people no. And I can tell you, my business, that has gotten my team and I so much further. I would imagine that you do the same in your business. And you know what? Before I ask you this next question, what's the website? If our listener is listening to this and they want to check your website out, what's the website that they can hit to go find out more?
The website is CPI Capital. So Charlie Patrick India, the word capital.com.
Okay, easy peasy. So, yeah. So, has there ever been any situations where you said, "Hey, you know what? You're not a fit for us"? Does that happen often or not often? Or can you kind of explain anything about that?
Yeah, no, absolutely. In our case, because we're more of a newer firm, we're more of a boutique firm, we've been pretty aggressive on our cultivation process with our investors. So we're willing to kind of do anything that it takes to bring on investors, because as a newer firm, that's what you're supposed to do. But also keep in mind that our onboarding process and our qualifying process does most of that work for us as well.
Sure.
So on the LP side, on the limited partner passive investor side, I don't recall any situation that things hasn't worked. But on a co-GP side, co-GP is more a situation where a group like us, an investment firm like us, brings on bigger equity partners who have either their own database of investors or they're connected with a larger investment firm. There's been situations where we're bringing on potential co-general partners where it hasn't been a right fit. Either the type of profit share wasn't right, or their mandate was different, or it just didn't seem that the vision really aligned between us and that larger type investor who has a group of investors with them, because that is even more risk. Because when you're dealing with one investor, you know who that investor is. Like, there's detailed documentation they have to fill to comply with security commissions both in Canada and the US. But when you're dealing with a co-GP type partner, they have their own investors, so you have to be extremely cautious, because they might be telling that group of investors whatever they want to hear to bring them on. So the person has to be scrupulous. The person has to be fastidious before we go and try to go into business with them. So the bar is higher on that level than just a retail individual investor.
And in today's market, what does a good deal actually look like, and how has the definition changed over the past few years?
Oh, excellent question. So
Thank you.
today's market that we're in right now, real estate goes through cycles. Commercial real estate, residential real estate, they go through these continuous cycles, and the concepts are the cycles are recession, recovery, expansion, and hypersupply. And I would say today we are in the recession phase of the cycle. Now, in the recession phase, there is a lot of distress, there is a lot of anxiety, There is difficulty of sourcing capital, being debt or equity as well. But debt has been a lot easier than equity these days because investors are cautious. They're either not losing money on other projects or they're not making enough dividends on other projects. There are potential geopolitical situations. Interest rates are higher.
Hmm.
So that's one aspect of the market that we're currently dealing with, which is just the sentiment. The market sentiment is definitely down. People's home prices
Yeah.
have come down or what have you. So the sentiment is definitely low. But the other component is that in a recession phase of the cycle, a lot of owners and property owners, they hunker down. They're like, hey, the market is too low right now. I'm just not going to try to sell. I'm going to wait
Mm.
till weather the storm and come out of the other side. So it's a difficult time to also make deals pencil. And what we mean by
Yeah.
pencil is when we underwrite deals, the first thing that really starts the underwriting process is the limited partner economics we're trying to achieve. So if we're trying to achieve between 15 and 20% average annualized returns for our investors over a 5-year period, so we're trying to double our investors' equity over a 5-year period. That's approximately 15 to 20%. It's more like 20% a year, but we're trying to almost double our investors' money over a 5-year period. Everything starts from there. So when we analyze a deal and we put in our assumptions, we put the current income that the property is producing, its occupancy and other detail, and then we also input the broker's price that is provided us. There is a wide bid-ask spread between what we're willing to pay the seller because of trying to achieve those economics for our investors and what the seller is asking. So currently I would say there is approximately a 20% gap between what we're willing to pay and what the sellers are asking for. And so the ability to pencil these deals and making deals actually transact is much harder. So you have difficulties in raising equity. You have some difficulties with raising debt, but you have difficulties also that there are deals that are coming out to the market, but a lot of them don't end up transacting because the seller is not getting the price they want, and they just want to go through this cycle. So it's a perfect storm currently to make deals work in this current market. And we're really there because of COVID and other issues. The Fed had to increase the rates. Prior to that, the rates were low because they had to lower rates to make sure the economy doesn't collapse because of what was happening, people not going to work. And that resulted in a lot of acquisition groups that are buying deals, or development groups to borrow a lot of money on a cheap basis, cheap debt, and buy a lot of deals. But right now, those prices have calmed down. Interest rates have gone up, so their valuation is down. So it's resulted in them, basically, the properties being worth 20 or 30% less. So they're not selling those properties. So it's a perfect storm, really, for us.
Yeah, so the inventory is actually low right now, and the deals, there's fewer and far between, which makes sense. We're seeing that in the residential real estate market as well, too. It makes it very challenging, but when you're buying property or when you're buying anything, the important thing is the price that you pay on the buy. That's where all of your profit really is, right? And if you buy something wrong, you invest wrong, you're shooting yourself in the foot from day one. That's why it's important to link up with a firm like CPI Capital. And I would strongly suggest any of our listeners that are interested in building a portfolio that they don't have to manage themselves, they can have the professionals do. They're going to want to link up with someone like you, I would imagine, August Biniaz with CPI Capital. August, we got to jump, but is there any closing remarks you'd like to share with our audience?
No real closing remarks. I think really when there is blood on the streets is a time to buy. I mean, this is a great time to get into real estate. The market is down. It's down some 20 to 30% in the commercial real estate side, on the multifamily side, residential side as well. So as long as you have a right deal or a right sponsor and investment firm to be able to partner with, and they have the right deal, it's a good time to get in the market.
That's fantastic. And again, check this gentleman out. You can go ahead and go to his website, CPI Capital. Just put it in Google and they're going to pop right up. August, it's been a pleasure getting to know you. Let's stay connected, and we'd love to have you back on here again on The Wealth Architect.
My pleasure. Thanks for having me.
Awesome. Great. When you're buying real estate, you need somebody that understands the ins and outs of the legal ends. It's so important to have the right attorney working for you. You also need a bulldog. Let me tell you something. The first time I sat in a conference room with this lady, Melissa Delana of Delana Law, I immediately knew she owned the room. You need an attorney that owns the room, that can solve problems and make things happen when everybody else can't. You want to hire Delana Law in Massachusetts, Connecticut, or Rhode Island. Delana Law delivers every single time. They're going to help you out with all of your real estate needs. It's delanalaw.com. You got to check them out. Hey, what's up, wealth architects? Listen, this show is all about building wealth mentally, physically, spiritually, and of course, financially. And you can only do that when you have time, and time is leverage. Time is everything. So there's going to be a point where maybe you're already there or you're getting to it and you're like, I don't have enough time to change the sheets on my bed. I don't have enough time to go clean the pool. I don't have enough time to find a landscaper, to find a handyman, to do any of that stuff. This segment is for you. So it's luxury without the headache, the hidden power of elite home management. Luxury real estate doesn't end at the closing table. In many ways, that's where the real work starts. Today's guest is somebody who operates behind the scenes of some of the most valuable homes, making sure everything runs flawlessly, problems are solved before they surface, and homeowners can actually enjoy the lifestyle they've worked so hard to build. Shane Pina is the senior manager of New Era Property Services, where he specializes in high-level home management, vendor coordination, and proactive property oversight for discerning homeowners who expect nothing less than excellence. From emergency response to managing complex vendor networks to protecting what is often someone's largest asset, this is about turning home ownership into a true luxury experience. Shane, welcome to the Wealth
Oh,
Architect.
it's great to be here, Emilio.
How was that intro? Did I do good?
You killed it. I mean,
Yeah.
I don't know if I could even word that up better than you just did, but that's exactly what we do. So well said.
It's amazing. You know, Shane, when we reconnected, I don't know, 6 months or so ago, you told me about this business that you launched, right? So let's dive right into that, right? Tell us a little bit about yourself, where you're from, and why this business? Why did you start this type of property management?
I grew up in the last 10 years doing property management. So, I manage condominium and homeowner associations, right? So you're dealing with
It's a mess.
lot. Yeah, it's a lot.
Yeah.
So the first thing everyone always says is I moved to a condo because I got tired of managing my property, managing my home.
Sure.
And one day it just clicked. I said, you could have stayed where you are. You could have hired a property manager, right? So that's what it clicked. And I just partnered with, individuals like yourself within the high-end market, and a lot of people who move here from anywhere in the world. They don't want to have to start from scratch. They don't want to look for the local pool company. They don't want to look for the HVAC company to come out for the heating and cooling tune-ups, right? Everything that I did already at a high level for condominium and homeowner associations, I brought that same approach to a single-family home here in Rhode Island.
Wow. And what the resume to have to start that. And I mean, I got to tell you, as a homeowner and as a property manager, not a property manager, I'm sorry, as a property owner for rental properties and my own home and everything, it's intense. And there is a lack of people and services out there today that can actually service homeowners. So that's such a value that you bring to the table.
I couldn't agree more, because when people think property management, what do you think of? Rentals, apartments, condominium, homeowner associations, other real estate agents. We're none of those things. All we do is, I like to frame it as, we protect the home as an asset, right? So we're scheduling all of the vendors monthly, quarterly, weekly, whatever it takes. And then we also provide the white glove housekeeping inside the home. Many of the homes are there with our house managers 5 days a week. So, we're doing a lot more than managing the home.
Yep.
The relationships we have with the families are a lot more than hiring the pool company to come out and clean the pool in the summer and close it, right? We have a personal relationship. We're in the homes.
Oh, there's
daily.
trust there. Yeah.
There's trust there, right? I mean, your Rolex isn't going to walk out of the front door one day, right? When you partner with a high-end luxury brand, right? There's everything on the line when it comes to who you refer, who you want to work with, who anyone wants to work with in any referral business, right? So by being able to keep the housekeeping in-house with our own employees, we train them, we mentor them. they're a lot more than just making the beds, running errands. There's a lot more to that. And in this industry, you could attest to that.
It's
as
a
well.
full-on concierge service. And that really, when I learned about your business, I was blown away, right? Because when I was like, oh, New Era Property Management, I was like, oh, they're managing like rental properties. And no, I mean, you're working with high net worth, ultra high net worth individuals who own homes, who are probably traveling all the time or working all the time, that want to spend the little time that they have with their family. They want a quality life experience. They can afford to do this. They actually can't afford to spend the time they can't afford to waste the time to do what you're doing.
And they
right?
don't want to try to solve the problem, right?
Yeah.
They just bought this brand new house. It's 10,000 square feet. It has a gym, a pool, a sauna.
Yeah, a lot of
everything in-
problems in that house.
Yeah. So, I mean, from day one, they move in the house and I say, hey, here's, whether you hire us or not, here are the 12, 13 services your home needs just to be protected as an asset.
Yeah.
Whether you hire me or not, you're still going to need these services.
Let's Shane, give us a real world example of a problem that recently you solved, okay, which could have probably been catastrophic or actually had major financial loss for one of your clients.
We all know about the ice dammings here in Rhode Island.
Oh, yeah.
But anywhere in the world, ice damming's a real issue.
Sure.
So
Unless you're in Florida.
Yeah.
But anywhere in the northern part of
it. Well, I mean, yeah, they had salt when it snows there. They don't have the salt to even do the
know
roads.
our Florida or Southern California listeners are like, wait, we don't have ice dams.
Yeah,
what the
that's
heck is
true.
that, dude?
They have other problems,
Yeah.
right? You got to know what's coming, and you
Yeah.
got to know how to protect the home, right? So just by ice dammings is a good example. Getting
example.
roofers out there, getting the snow off the roof before it could accumulate.
A
Right?
lot of damage happened this winter from taking the snow off the roof the wrong way.
Exactly. And that's a whole nother topic
Yeah.
because you got to make sure you're hiring the people who know what they're doing,
Mhm.
right? They have vested interest in their relationships as well. So I'm
Mhm.
not just getting on the phone calling whoever's going to show up.
Yeah.
You know, these are individuals who I've worked with for a long time who also have a reputation, right? So preventing problems, and that I think that's probably the best one I could use that we
Yeah.
just dealt with. Several homeowners. I mean, it's great for the insurance, claims guys who are making all this money,
Yeah.
But on the other end, the homeowners don't want to be dealing with that.
The time, the hassle, the noise, just the frustration of having people doing all that work on your roof. Is
So
just
many insurance
so
claims.
disruptive. Absolutely. So how do you identify this gap, right, in the market and decide to build a business around luxury home management?
People are too busy. Everything is on demand.
Mm.
I mean, we could
Sure.
have we could have lunch here in 10 minutes. We could have a new pair of shoes here in 30.
True.
So, why isn't that same level of care coming to everybody's everyday life? We're all busy. We're, running businesses. We're professionals who work 60, 70 hours a week.
Yep.
Sometimes those are our clients. A doctor and a lawyer, they come home. They don't want to spend the time doing all of these things.
No.
So I've seen that gap for a while. I just never really knew how to fix it. Over the last several years, it's been organic. People are looking for this service. They just don't know where to find it.
Tell us like what the typical client of yours looks like.
Business owners, private equity, they own just many different businesses. There's no
Yeah.
one specific category, but usually they're wealthy individuals with more than one home.
Age, demographics, like what do we,
All the above.
Yeah.
I can't even put one on it. I mean,
40 plus or 45 plus?
40
or-
plus, 40
Yeah.
plus. The woman I just met with, I mean, I just got a great account this morning.
Congrats.
I've been talking with the family for 8 months.
Yeah.
They built trust in me over 8 months. They call, hey, Shay, can you
Takes
come?
time.
Yeah, it does.
Yep.
And even though we haven't worked together, they pick up the phone already and they start calling me when they need something.
Good.
Right. And I think bringing somebody in your home sometimes around your family, it's not something people want to do. Right.
Yeah.
So people who didn't grow up with a lot of money, they don't know how to go about certain situations and they don't even know the service exists.
Yeah.
Right.
I never knew this service existed.
It's really hard to explain because,
Yeah.
People see this throughout the world, but in New England, it's getting a lot more popular.
Yeah.
Specifically
In Rhode
where
Island, it's pretty
yeah.
unheard of.
It is. A lot of it is private families, right?
Yep.
Families travel with their assistants. They travel with their chefs. They travel with a team of people. Here in New England, they partner with a third-party company who doesn't have to travel with them.
Yep.
Right? We're not on their payroll. We work in a different capacity
Yeah.
than what you're used to seeing when it comes to private families.
That's amazing. And what are the biggest mistakes that you see homeowners they make when they're trying to manage their property on their own?
They let things build up until it
Yeah,
bottlenecks.
they do. We do.
And then the spring is here,
Yeah.
right? They don't know when the spring cleanup is going to happen, and they just power wash their house, right? And then they put down the mulch, right? There's a system that needs to go into place because one service shouldn't happen before another, right? So, all these small things that you got to do one before the other, or else you're going to backtrack, right?
Yeah.
So waiting last minute sometimes, and then trying to get it all done at
Oh,
once.
procrastination on things that just you're like, oh, I don't want to do this. I mean, I could tell you with my house, one year I forgot to bleed the lines for the sprinkler, the irrigation system, and then one day I woke up and there was just water shooting out, and I was like, oh no, that's going to cost.
A lot of it is guesswork too.
Yeah.
Somebody moves here from Florida. They don't know they have to do that. And
True.
they think they know how to manage a home because they did it in Florida. So, on day one, I say, hey, here there's 14 services. It's $50,000 a year.
Yeah.
You don't have to hire. You don't have to pay anyone. It's just one monthly payment. You have an annual budget. I'm running your house like a business.
I was going to ask you how that works.
So, your home, it requires X amount of services.
Yep.
I get everything under contract. I'm hiring the vendors. I'm managing them. And all you have to do is say, hey, here's my $50,000 budget.
Yeah.
It includes these 14 things, right?
Yep.
So you make one monthly payment out to me, 12 monthly payments. I manage all the vendors. That's all you have to worry about.
Is it like cancel anytime?
Of course, yeah. So I've never had anyone cancel.
Yeah.
It's a problem. I guess I
can't
haven't had to
imagine.
solve yet.
Yeah, that you would, unless they're going to sell the property or something.
Yeah, so I haven't had that happen yet, but it could, right? I mean, you have landscape, snow removal. These are big invoices sometimes. So that 50,000 could be 150,000.
Oh yeah,
depending on the side. That could be
Sure.
a landscape contract,
Yeah.
right? So it's all depending on how the agreement is written out, right?
we have some clients, they spend $250,000, $300,000 a year on just landscaping.
Exactly.
And and it's all relative, right? Because they could be making 15, 20 million a year, or more.
Yeah.
And so it's a drop in the bucket for these people, especially for some of their properties in coastal New England. And, Shane, so you cover, like, if somebody's listening to this, right? If somebody's listening to this and you're curious about Shane and his business, you can go to nepsne.com, nepsne.com. And what can you tell us the service areas that you cover and you're offering service in?
Yeah, I would say pretty much anywhere within an hour of Providence, Rhode Island. We have houses and homes down in Westerly Watch Hill, down to Brownstones in Boston.
Yeah.
Plymouth, just anywhere within an hour, not with traffic, right?
Yeah.
That Boston commute could be 2.5 hours with some traffic. But
So Worcester, all the way out to parts of Western Massachusetts,
Correct.
actually. Yeah. Into Connecticut, you do Connecticut?
Yeah, so again, we partner with homeowners,
Yep,
right?
yep.
So, if they call me tomorrow and say, hey, Shane, I need somebody here 5 days a week for housekeeping. We interview locals. We interview experienced housekeepers and house managers
That's great.
in your local market, and we work together. So it's not, hey, I'm just going to take this phone call and we're going to show up tomorrow with somebody who's just ready to work 40 hours a week. So it's really getting their vision. What are they looking for? What's important to them, right?
So currently, it sounds like they're getting you.
Yes, we're a small company,
Yeah.
right? We treat our employees like family.
Yeah.
So when you're partner with us, I mean, these are people who want to be in business. These are
It's exciting. Yeah.
it is. They want to be in your home. And I would say the same thing for our clients, right? Not every client's always a good fit.
Yeah.
Some people just don't want to be happy sometimes.
We are just talking about that with our last guest. Sometimes it's best to say, hey, we're not a fit. We're not aligned.
It's true. It's
Yeah.
true because some people just don't want to be happy. They're looking for the problems. We don't hire people unless they're type A. They go above and beyond, right?
Yeah.
So when I know a client is saying, "Oh, this happened or that happened," it's a shock,
Yeah.
right? And if something ever did happen, we're making a mistake. We own it.
Yeah.
But when certain things happen over and over again, it is tough to want to put an employee in that environment where I know they're going above and beyond.
Sure. Yeah. Yeah, absolutely. And you don't want to be like, there's nothing worse than somebody beating you down over and over and just, it's not a fit. I'd rather work with people that enjoy our services, that we enjoy working for, and attracting more clients like that. And, I think anyone listening can understand that. So lastly, because we got to jump in a minute, but for somebody listening who owns a high-end home, in your service area, okay, what's the first step they should go take to get their property professionally managed?
Call me 401-617-9527.
Cool. And, you know, if you're like, shoot, I didn't write that down, I'm in the middle of this or that, nepsne.com. And I got to tell our listeners, listen, Shane, I offered for Shane to come on here because this is a service that I see lacking right now. As somebody who owns a luxury real estate brokerage here in Rhode Island, we service into Mass and Connecticut. I wasn't aware that your service existed in Rhode Island. I've heard of things like it, but I wasn't aware that access was here, that service was here in Rhode Island. I am so pumped up because there's so many different people that could use you, and I know you do a fantastic job.
Well, I appreciate being here, and I appreciate the opportunity to be here. And I mean, property managers are usually in real estate.
Yeah.
Am I right?
Yeah.
I'm not.
You're like a property concierge.
I'm a property concierge, right? So, when that home sells, I'm there on your behalf in a way. So in 10, 15 years, I'm there. You're still going to be the listing agent, right? You're not. Another property management company is usually in real estate sales, which is a huge difference with my company.
And it's good to know for any real estate agents that are in the marketplace too. You want to link up with somebody like Shane, get to know Shane Pina of New Era Property Management,
Services.
right? Property Services. Oh, that's right. Awesome. Good stuff. Shane, thanks so much.
Thank you, Emilio.
Great job. You're welcome. We had another bang up episode on The Wealth Architect today. I'd like to thank our guest, August. The keynote guest today, August, with CPI Capital. Follow him. Check out how syndications work, what type of funds they have, and you can go ahead and dive right in. He is fantastic. And we also would like to thank Shane Pina of New Era Property Services. What a great guy. What an awesome service for high net worth individuals and ultra high net worth individuals who have homes that they don't have time to manage correctly. Oh, man. So thank you to everybody listening. Thank you to our producer, Lucas, AJ, everybody else at iHeartRadio, and you, again, our listeners. God bless you. We'll be back here next week on the Wealth Architect podcast with Emilio Despirito. Don't forget to subscribe. Peace.